Okay, I'm very sorry. Good day, good afternoon, good morning, good evening, whatever time it is you're watching. I want to really apologize for keeping us waiting this long. In no way is this my plan, and I really thought I had everything in control. It's really been a long time. I came on here to do a live. Okay, thank God we're just going live here. Fine. Okay, so I think we are about to go live. Yeah. I just want to be so sure we all can see the screen, which is what I'm trying to. So hard. Welcome. Yeah. I believe very much soon we'll be able to see the screen. I don't know why this is like taking forever. I'm trying to also clear my tabs so that nothing will be delaying whatsoever. Yeah, just a minute. The window capture is most certainly fine. It captures that. Then why can't it? Let me change tabs. So, minutes. I'm trying to see how I can ensure and yeah, I'm pretty much certain that the window capture now can see it's been captured already for those who are watching this on YouTube. The vertical folks, everyone can see this for themselves. Just a moment, I guess it's gonna come up soon. Just bear with me. Yeah. I really do believe it's gonna come up soon. Just a minute. Yeah. And I am used to using window capture, which is why this seems to not make a whole lot of sense for me right now. But I mean, hello. Hi, Etiel. I really wanted us to discuss this live session, which is what I hope to do. Over the past 5 minutes now, I've been battling with my streaming software OBS, which I have checked, and I believe everything should be right. I want to believe you can hear me. Hello. So I wanted us to discuss few things in the next 30 minutes about certain markets, the health sector in the US market. They just concluded Tesla IPO. I wanted us to talk about that, and also what we're projecting for Q3. Okay, fine. I think we now get it. After a long oh my god, can you imagine? After such a whole lot of disgruntled configuration, seem to have greeted my, what do you want to call that right now? Seem to have greeted my chats. I have initially had it well prepared prior to now, and I'm pretty much shocked to see it this way. But I think you have to manage with me this way for today, and then hopefully tomorrow we can make a better, what's the word? A better chat for you all. Just pardon me for today. Let's just make something go ahead. All right, for us today, I think that for me, I want to appreciate every one of you all for your patience. Is almost like 10 minutes that would not just end, but at last, thank God, we're able to make some good some good outcome eventually after successfully winning. So Again, you're welcome. My name is David. I am, yes, David Oludele is my name. Also known as El Guild. I'm super excited to be hosting you all today, and it's really been a long time discussing the market. I do hope at the end of this discussion, yeah, I'm also going to be checking. I do hope at the end of this discussion, we'll be able to say we have made, to some certain degree, a level of progress. So I'm also going to be running a test on, and by the way, we also rename our YouTube channel, and hopefully, obviously, because we no longer have a, we no longer have this, what do you call that now? This partnership with L Bank. Yeah, I no longer work with L Bank. I've not been able to come on here and discuss so much, really. And I do hope I will be able to address several of these things today. But then primarily that's not why I am, here. I really do hope in the course of this discussion of mine, for goodness sake, wise. Wow, this really looked different. This is not how I really had it, I think. Yeah, so sorry guys. I'm actually having the need to readjust my OBS. So much I'm still trying to work on. Yeah, just bear with me. So some things need, it's really been a long time, and I really wanted us to do this today. Yeah, so several readjustments. I think that's enough of readjustment for today. Okay, so fine. Eventually, I say we're good. If you don't mind me saying that. Yeah. So where are we? I was going to be talking about the fact that as at today, Bitcoin now sits at about $60,000. The last time we had this live session, it was somewhere around the 70Ks. So 70,000 Ks. And so here we are. Bitcoin 64,400. Of course, it got to a low at, a low at 58K. And I remember telling folks who joined this new community, I'm beginning to pay my attention to how we created. I began telling people to buy Bitcoin 1st of July 2026. And my reason for that is simple. I have an argument which I'm going to probably be showing you all today, if you don't mind. And the reason is very simple. Just please stay with me. And again, if you've got any question, please do not hesitate to ask me. I did told people to begin to buy Bitcoin. And by the way, I also did told people some 3 months ago to buy Moderna MRNA. Yeah, bro, Moderna just dropped 5% extra. Why? I was not expecting this drop. Anyways, I'm going to come back to Moderna. Oh my god, it was on $80 the other day, and now 74 as I yesterday, but now it's down. How many percent? 18-20%. This is not so good. Anyways, it's about understanding the cycle of what it is that you have envisioned for the market. So I'm going to be telling you my exit on Moderna. Why Moderna? We're going to be looking at the financial statement. We're going to read through some things. You'd see for yourself how beautiful the Moderna financial report is. And of course, it's not the beauty of it we are going to enjoy or make the most of primarily, but the point is we need to be prepared, right, and take advantage of what we think the market is going to be about. Once again, I am super excited to be hosting you as we discuss the market. So this is a 6 monthly candle on Bitcoin, and I think if I pull up this particular chart, I think this is going to probably be of help to everyone who cares to listen and understand what the market is doing. All right, so this is it. historically, I'm just going to mention that, and I'm going to probably wrap the session in the next 10 minutes. I'm not going to stay long. I just want to take this and take this off my box for projecting us for Q3, because now when we're discussing projecting for Q3 or projecting for the third quarter of this year in readiness for the bull run, obviously, I think it's important for us to ask ourselves, how has been Q3 at the peak point of the bear market? When I'm saying the peak point, like at the point where the bear market is pulling off, wrapping off, and closing down, how has Q3 been? So let's begin from one of the relatively important years. Of course, every other years are important in Bitcoin and the cycle of cryptocurrencies, and Bitcoin generally. But I think we need to begin from the one that really came with the most attention that Bitcoin ever had. 2012, 13, 14. That was it. So we had a major bull run, as you all can see. I can draw so much, but I don't want to draw so much. So you could see there was a move from here to that point, right? That was the top. From sub $20 level, it peaked at about $1,300, right? Somewhere around there. Okay, so I think I'm gonna just draw everything back. Let me just use this so people can actually be able to flow. So from these levels, you can tell that the market moved from that $15 mark right above to a new peak point, and this is the peak point, clear enough. So, and from that peak point we resumed a decline, because as expected, for every complete market cycle there will always be the bullish market, and of course there will always be the bearish market. There is never an eternal bullish market. Such a thing is only a bubble that exists for illusionary applaud. So I think that's important for me to state. Great. So now you could see that from $15 to about $1,250, Bitcoin really made a very interesting move. And this was from July the 1st, 2012 till this peak point was exactly at July the 1st, 2013, essentially a 1 year of full-blown bullish markets. All right, and then we resumed the decline. It's actually raining here, and I believe you all can hear me. We're not going to keep this long, because again, we live in a tropical area, so this is part of the beautiful things we enjoy. So now look here with me. You could see it dropped how many percent down. Please don't get carried away, because I already told people to start buying into the market, and I already began doing. It dropped about 87%. So let me use a price range tool so we can have a fixed measurement on every of these dump. So clear enough, 86.53, approximately 10%. And so we have 1, 2, all right, 6 months bearish candle, and then there was one final push down, which also survived an extra 6 months, and then the next went up. So this was the reality of this particular cycle. I'm just pointing out some patterns that I think we all need to pay right attention to and never get confused about. And from that, we resumed a new bullish cycle. So essentially, if you would agree with me, the next bullish cycle began just at this particular point from $171, right? Essentially, you could see that that was almost about 11x from where the Bitcoin market, more than 11x, almost 12x from the previous bearish market takeoff point. So I used the $15 mark. In fact, that might even be the least. I think we should even, okay, I think that's okay, because we could as well use this, and this represents the bearish market. So from like $4 all the way upwards. So in essence, that's the least the market dumped. It came as low as $87.1, and of course this was the point the market began buying back up from 163. So the percentage difference between the low of that particular cycle and, oh my god, the difference between the low and this is what I want to measure. Just stay with me. The difference between the peak of the previous cycle, if it is relevant, but let's assume it is. So the previous cycle had a peak point at $30 or somewhere about $32. So the peak points of this 2011 cycle and and the bearish market of the 2013 market is about, what am I measuring? It's about sorry, I'm about measuring that. Yeah, this is about 80% difference between $30 or 31 and 163. So let's get going. That's what I want to just mark up for you guys. Please enjoy this markup. I'm sorry. Take note of this peak point because it's important for the next. So it's made a very interesting move, but that's none of our concern. What we want to really pay right attention to is the peak point of this new high, which is at 19,000 or 19K700. So it also dropped about 84%, as y'all can see, from this peak point, which I really want y'all to look at with me. So you see, let me duplicate this peak point. So what you're watching is the peak point of the 2018's bullish markets. This was the 2017 rather. Then we had a bearish market. Now take note, this time around we are having two. You see that? 1, 2. Two, what do you call that? Two bearish candles, right? Two selling candles, right? And following that, we had the buy. I mean, that was the starting point. Of course, a bit of consolidation, but then, I mean, that was literally where it ended. After like 12 months of a full-blown bearish market, then we came to the peak or the very closing point of the bearish market at the opener of this new 6-month candle. So in essence, I'm also going to mirror the low, right, of this particular markets in relation to the peak of this market. So what you see is now we have 61%. I wish I can write all of this so you guys can take note of that, because I think it's also important. So you could see that the gap or the distance between the 2014, 2013, 2014 bearish market, the low, right, and the high of the 2011 bullish market, the difference is 80%, 81% essentially, which is this. And just to be sure everyone can see this with me, especially those who are watching with us on watching with us on the, what do we call that? Well, I don't think, just let me confirm if everyone can see what I'm showing. Okay, fine, that's it. Everyone is seeing what I'm saying. So now if you measure the distance between the low, oh, thank you, Lord. Thank you, Lord. Glory be to God. So if you measure the distance between the low of these 2014 bearish market, this is the low, 163, and the high of the 2011 bullish market, which is 31, difference is 81%, right? Now take note of that. Let's come right here. And of course, this was after 3 6-month bearish candles, right? 1, 2, 3 bars, 6 months each. That's the time frame we are on. Now this is the peak point of the 2013. This is the peak point of the 2013 bullish market. That was when we can hit $1,243. And now this was the low of 2018 bearish market, following the 2017 bullish market, which brought Bitcoin to like above 19K. So the low was 3,100. Essentially, Bitcoin dipped about 84% from 19,767, right? It dipped to like 3,165, and the gap, the difference between that low and the peak point of the previous cycle is about 61%. About 20% difference between this and that. So I'm going to probably write this somewhere there, right? Because I would love to know what your thoughts on this, right, in the comment section, because all of this really matters. Yeah. So what I'm writing is there is a 20% difference between intra-bearish cycle lows and high. Intra-bearish cycles low to high. So what this essentially is saying is the low to high, that's what I'm calling this, the low to high ratio, which is the bearish market low of 2018 in relation to the high of the bullish market 2011. The low to high ratio here was 60%, in contrast to the 80% low to high, which is the low for the 2014 bearish market in relation to the 2011 bullish market. So yeah, so 80% was the ratio of the low to high between 2014 and 2011, and 60% is the gap between the 2018 bearish market low and 2013 bullish market high. 60%. So the difference between these lows is 20%, essentially, approximately. Now let's quickly come back right here, so we quickly wrap things off quickly. That's what I'm going to be doing, and that's it. I'm going to call it a wrap. Nothing to stay for too long, I believe. Yeah, I'm not staying here for long. Just, doing the little we've got to do right now and then call it a wrap. So we have a low. This is the low for the 2022 bearish market, $15,000. Right. Please don't get carried away. I mean, studying price is just the best way to ensure that we don't have palpitations unnecessarily. We just stick to data, and of course we're not over excited or emotional in any ways. So this is the low and this was the high. Right. So now this is the low for 2022 bearish market, and this was the high for the markets, right? This was the high, and I think it's very much important that we keep it that close. How many percent? And of course, take note that we only have two bearish bars. One was overwhelmingly bearish, which is telling you that the bears control very much a perfect bearish engulfing candle. Then this was going to tell us that, yes, all right, exhaustion point, all of that. Anyways, two candles bearish, and then the next resumed bullish, which was the beginning of the bull market, which ran from 2023 essentially to 2025, if I may. Okay, so how many percentage dump? All right, I hope we are still very much connected. We're not going to be staying here long, like I did mention. All right, how many percentage dump? How many percent? Did I say percentage? I think that's what. How many percent dump did we really go? Wait a minute. I don't believe you guys could see this. Just to be so sure everyone can hear. Okay, fine, great. I think that's good. Yeah. Hi. I'm just saying hi. Thanks, man. Hi, Christopher. Hi. By the way, I'm gonna be changing this night bot. Hey. Your questions, please do let me know in the comment section. I'm gonna probably be doing these little live sections just to let you all know what really is my thought process, and I wouldn't mind you also telling me what you all think. Anyways, back to the chart again. So this is the peak point of the 2021 bullish market, 67k approximately. The low was 15k 300 thereabouts. All right, so what I want to measure again is how much it dumped. So this market dumped this time around 77.55, and even if you try to be very much precise with every of the candle wicks, I think it's just roughly 78%, right? Meaning nothing close to what it used to be. So don't forget, we had how many percent dump in the year 2011? I guess that's the year. So okay, 2014 we had 87% dump. Yeah, from 1,250 thereabout, 87% dump from peak point to low. And of course, the difference between the market low of that year in relation to the peak point of the previous year is just about 80%. And in the year 2019, 17, we saw the bigger market picking at $19,767, approximately 19,800, and then it dumped to 3,165, essentially dipping 84%. And the difference between the low point of that bearish market in relation to the peak point of the previous bullish cycle is 60.79%, which was the place where we had a 20% difference between intra bearish cycle low to high. Now come here with me while we look into the 2021 bullish and of course bearish cycle in 2022. So we now have 77.7% dump, which is of course about 5%. Is that 5%? Which is about 7% percentage difference between the deep percentage of this particular year 2022 in contrast or in comparison with the 2018 bearish market, which gave about 84%, right? So you could see 84 minus 77 is roughly going to be about 7%, right? 84 minus 78, let's say 84, that's about 6%, right? So 7% different, right? Which if you compare that with the previous one, we had 87% deep from the peak point to low, like 123.22 to the low of like I think 163. So the difference between that and this 2018 bearish market is 84 minus 80, it's 87, about 3%, now 6%. So which is 78 minus 84. Now, if you don't mind me looking right into this, we now have two bearish candles, right? Before we come into this particular bearish market and go into that, we must also measure the gap between the low of 2022 bearish market and the high of 2020. Yeah, the low of 2022 and the high of 2017. So look at this. The low of 2022 is almost negligible to the high of this particular year. Yeah, look at that. I mean, this is the low. What do you want to measure? Even if you're going to measure the body of the candle, you have 10%, which is a huge gap closure, right? I mean, irrespective of what you want to measure. Of course, I can't measure this because there's almost like a kissing point, and this is almost like a supply zone flipping to becoming a demand, which is like an S&D flip zone, a key level, which you need to see right here, that held, right? And in previous cycles, you'd see that wasn't the case. There's this, point when the market just feels it's time to maybe not, but then it wasn't using the previous high as its key level or its key zone, right? When the market dropped, it was because it was the convenient point for the market to retrace, not this drop coming to use this particular peak point as a support. So just to tell you the extent to which there is a closure of these huge gaps, that the low of a particular bearish cycle in relation to the high of the previous cycle is already having, there's this quick closure. Now, saying this is first to have a little bit of a sneak peek, right, into what we should be expecting and understanding for today, for this particular bearish market, right? It's important. Why is this important, you might ask? It is important because we now have dumped how many percent right now from the peak of this last bearish cycle. The bearish cycle began essentially 25 July, right? And I'm going to look at Q3 if I can, but then look at this. You see it has dumped this much, 50%, 54%. All right, now if we're gonna buy the rule of the previous one, so 87% deep, 84% deep, 77% deep. So we've had a difference of, I don't know if it's gonna be exponentially calculated. So we had 3% difference between 87 and 84, 6% difference between 84 and 78, which is a deep for the 2022 bearish market. Now, if we're gonna be using an exponential, then that implies only subtract the 12% from 77 or 78%, meaning that we should, what we've just read in terms of the percentage differences, it gives the possibility for a potential drop from wherever the market is right now to using the exponential of the difference, it could actually drop another 30 something percent more wherever it is. So for me, really thinking about the fact that, oh yes, that's a very huge possibility. Oh yes, I really need us to really pay critical attention to this. And I mean, I think I'm actually considering taking a short on Bitcoin, maybe like a 10x short or 20x short, whatever it is, if I can right away, which is what I think I'm gonna probably just. Why? Because of what we just done? Yeah, of course. So now looking back, I mean, I think we need to look also into the way I think there are certain altcoins that will just terribly perform well while Bitcoin is trying to find its very peak point. Now the goal is not to tell you this is the exact peak point, and if Bitcoin is only having 30% downward risk to forfeit for it to go way, because the truth is it's going to do like almost 180k. This is almost 180% waiting for you, so 30% drop might not be so much to risk, really, bubbles. But then I think it could be a good bet at some other time, but not now. And I'll tell you not to be very excited about all of this kind of IPOs that are overly bloated. That's my take. All right, so it's not financial advice, and I think that's my own take on that. So I think I'm not going to talk so much about SpaceX. Do your own research about that, and of course, know this for yourself. For the past 1 month, those who got on it, they've been so badly crushed. Look at that, 30% in less than 2 months. That's something. That's something. All right, I'm just going to say stay safe. On this note, I'm going to be taking a bow right off the market. I don't know why Ethereum has been holding this point strangely strongly, as you can see. So I think that place, I'm not sure if it's still holding right now. So if you look at that, I don't know if you know how you want to draw this, but there was a point Ethereum really broke out of that particular range. I think that's it. So you could see that for yourself. This point held, and this was the break point. So it's possible Ethereum drops shortly to 1420 before going back up. Anyways, that's on how the market tends to play out. Right now, I just want to give you a mental picture of what it is that side of us. This is David. I'm super excited to host you, and I'm looking forward to having you join us in the next, I don't know when that's going to be, live session. I'm going to just probably do a few breakdown. Thank you for coming. Keep winning. Looking forward to seeing you some other time. And again, don't forget to keep following us, and if we get some good partnership, I'm going to be telling you about that. Join Web3 Chase. We drop jobs, we drop updates, and of course opportunities. You don't want to miss out on any of these, right? All right, so that's it. So thank you. Bye.